YouTube, what's going on? Welcome back to another inter-equity trading video. Today, we are hopping right back into that fan favorite series, Training the Eyes. This is gonna be episode number 7. In this episode, I kind of did it a little bit differently, but I still made sure it was clear and concise for you guys. Broke down everything and made sure we followed that narrative as best as possible, okay? Training those eyes. Please guys, take your time watching this one. I feel like this one is probably one of the better ones, one of my favorites. If you guys enjoyed, please leave a like, a comment, subscribe if you guys have not yet already. We got lots more content on the way. Talk to you guys soon. All right, guys, so here we are on Euro USD, and we're gonna be in the lower time frames, okay? And remember, the whole purpose of these videos, again, is just to train your eyes to see liquidity, how I view it. We're not gonna be going from higher time frame to lower time frame. That is for other videos. As you guys know, we made a bunch of videos on bias, diving into liquidity concepts overall. The sole purpose of this series, again, is to just train those eyes. I've used the rewind tool, and this is all we see right now. So I'm gonna break it down with you live. We're gonna follow that narrative and break it all down for you. Okay, so what can we see? Big sell-off to the downside here, okay? After that, the market found some sort of recovery back up, taking out internal highs. This volume back up, grabbing highs, this induces buyers into the market, okay? Which means we could probably see a short back down to the downside. However, do we have liquidity below the low? Do we have liquidity below this low? That's the real question for you guys. I don't see any liquidity down here yet, so there's no reason for us to target this yet. There's no reason for us to look for that short yet. So let's follow along. We take out this high, again, which induces buyers into the market. So we can mark this down as a BOS, because again, this is where retail would be marking this thing out, and they want to be buying back down at the low. So what we can also do is put a red box down here to indicate an area that buyers went into the market. What else can we see? Price sold off, printed this internal high, and then continued off to the downside. After that, very choppy, very rangy, and we can all agree that we are building a lot of liquidity below these lows. Okay, so it can be used as a future target, but again, all we're doing right now is tracking liquidity and viewing where the market could be heading to next. So what we're gonna do is continue playing this out. All right, so we go long, and we're starting to run some internal highs to the left-hand side. And there it is. So why is this important? Since we have taken out this high, okay, grabbing liquidity above this high, this level that we're now creating could be a possible liquidity block. Now, it does not mean we enter a sell right away. No. Yes, the market could run bearish toward these lows, but my whole idea, this whole scenario that we're trying to frame right now is to see price back down to this low eventually. All I can see currently, we're gonna make this blue. All I can see currently is price has built internal liquidity. We grabbed an internal high, and that is it. So I'm literally gonna need more price action, because remember, if I don't see liquidity other than these lows, then we have no reason to trade yet. We're gonna play more price out. Okay, now things are starting to get a little more interesting here. Okay, and as you can see, just the more data we have in front of us, the more price we have in front of us, slowly things start to make more sense. So what happens is price hunts for these lows. This is an area down here where buyers are interested in buying this asset. Why? Again, don't forget, BOS to upside up here. So since we've taken out this high, this area is where retail buyers want to be entering positions down here. Okay, they want to push price back up to the upside from here. They are going to be entering positions, buy positions back down at the low. We understand that. What else can we see? Before having this big sell-off to the downside, what did we do? We simply built liquidity at this high. Now, we're going to zoom in and identify why there's liquidity at this high. And again, this is very simple, guys. I don't want you guys to overcomplicate this, but check this out. This high respected this high. What do I mean by that? Simply tapped into this whole area, this zone, this price level, whatever you want to call it, tapped into it and moved away to the downside, okay? And then look what happens again. This high respects this high. And then we have a big sell-off to the downside. Now only imagine how much liquidity was now left above this high. If sellers entered here and sellers entered here, their stop loss is going to be right above this high, just like this. If it was maybe above this high, as soon as this big sell-off occurs to the downside, they're probably rolling their stop loss, okay? Above this high, or maybe even to break even. What I need you guys to understand is there is going to be liquidity above this high, okay? We've simply left highs to the upside. If our sell idea, if our sell target stays intact, and listen carefully, if our sell idea stays intact and we get a move back up to the upside, sells are active. Okay, we want to look for sells back down to the downside. But remember, we need logic. We need to make sure we have a target in mind. We need to make sure we have liquidity to the downside. And check this out. Coincidence? We have liquidity built, and right above it, we have our liquidity block. Why is this a liquidity block? Very simple. We grab a level of liquidity and we move away to the downside. Entry number one, and I think we can all agree now, is going to be right above this high, just like this, with the stop loss covering the high. Targets, in this specific scenario, we need to allow price to play out a little bit more. Why? We simply don't have any liquidity to the downside yet, right? We just had this big sell-off, and yes, we're coming to this area where retail traders want to be buying from, but we haven't respected it yet. So let's play price out. It does exactly what we thought was going to happen. We have tapped into this whole trap area, okay? And we go long. Now, let's analyze this price action that went on back down at the lows over here. And we can see that we have built liquidity here as well on a lower time frame perspective, right? These internal lows and highs. Look at this channel. This is, again, this is the kind of price action retail wants to see. There's going to be buyers entering positions at these lows. So you can mark it out however you want. You can leave it like a trend line, or you can have a channel. Doesn't matter. All we know is liquidity is being built down here at this blue line. That's what this blue line indicates, okay? There is liquidity down here. We slowly trade back up to the upside, okay? Remember, we have left these highs intact. So let's see what happens here. Price finally takes out this high. Now, yes, you could have entered right away, and that's fine. And I want to show you guys something very, very powerful. We take out the highs and we have a sell-off to the downside, okay? Taking out lows here and taking out lows over here. Now, why is this important? We understand when we take out lows like this, this induces sellers into the market, right? So where's their liquidity going to be? Above this high. This is now going to be known as a trap. Again, you want to train these eyes, guys. We grab these highs, we get a sell-off down. Now we have traded below these internal lows, inducing early sellers. So where's sellers' liquidity going to be now? Anybody trading these lower time frames is going to be above this blue line. So look what happens. We grab that liquidity. So the trap occurs. Okay, we've induced sellers and now trapped them. Remember, we're trading within this higher time frame liquidity block to the left-hand side. So you have two options here. And this is where a lot of traders get psyched out. Okay, let's just say, and listen carefully here, please. Let's just say you guys enter as soon as this high gets taken out with your stop above this high. Now, what a lot of you guys are probably doing is when you get that sell-off to the downside, okay, you're a little bit in profit. What you're probably going to do is you're going to roll your stop above this high. And look what price does. Comes back up and takes it out. Takes that trader out who mismanage their position, which is what probably a lot of you guys do. You tuck your stop above this high. You've now left an option for price to come up and take you out and then run to the downside. Understand this. If you enter right away, what happens sometimes is we induce and then trap once more, and then the move occurs. Don't get psyched out. Don't get scared when we print this high. You can't have any fear. Allow price to play out a little bit sometimes. That's why we want to keep our stop above this high to the left-hand side. That's the most important part here. Okay, don't mismanage your trade based off emotion. All right, so again, first opportunity would have been as soon as the highs are taken out from the left. But if you were patient, another opportunity was as soon as that high is taken out, again, stop loss above this high from the left. Just like that. Target right back down at the lows, just like this. Let's play this out so we can all see what happens. Okay, and I think you can all see what happened again. Guys, listen, this happens over and over and over. I need you guys to start trading these eyes and seeing this. Trap down at the low. We get a false reaction up. This bullish move here from low to high. This is false. This is just inducing buyers. And look what we take out. Internal seller liquidity. Option number 2, entry number 2 possibly, right here. okay? And stop loss above previous high, just like this. Again, targeting the lows. So you have two beautiful opportunities following the system, following the rules, and we're targeting that liquidity to the downside. And if I play price out, we get a pullback, and then eventually, boom, target smashed. All right, guys, I hope you enjoyed today's video. If you did, you know the drill. Leave a like, a comment, and subscribe if you guys have not yet already. We'll talk soon, guys. Take care. Be safe.